Hi everybody, welcome to another update on the stock screener. Today we continue our due diligence on Pieridae Energy and look at the history of this company. If you can understand the history, then you can see where it is going. Okay, so why did this company crash from 2018 to 2020 and 21? Probably due to low gas prices. And why did this turn around? Why is this a turnaround story? So for this, I just look at the financial statements. So I just took all the data from 2018 until today. And you can see the chart here. So net earnings, let's start with that. Net earnings have always been negative, which is very bad. This company has a very bad history and has actually never made any profits until this year. So this year, this company is turning to profitability. And that's why the stock price is finally starting to take off. I expect that this company will be able to make profits for the next few years, and that will increase the share price and equity. So let's look at the equity. The equity, it started as a shell company at $50 million. They acquired assets. This is Ikuma acquisition. So they acquired a lot of assets. The equity went up a bit, but started to decline here again. And that's when they acquired the shell assets and when the gas price started to collapse and the oil price started to collapse. So here they were in a very bad situation. The equity started to decline. But at some point here, it bottoms out, and that's when we were going into the oil and gas boom last year. So oil went from 60 to 100 and gas went from 2.5 to 4, 5 today. So profitability returned and the equity started to go up again. So this is actually the bottom. The turnaround story started in 2022. Then it started to rise, and I expect that this trend will continue to rise. So you can extrapolate this like this, and it will go up. So these are the assets. Assets went down due to depreciation, but eventually will start to rise again when earnings go higher and higher. Because we are in an oil and gas boom, commodity boom. So I expect oil to reach 90, 100 and go higher. So I also projected that in the earnings. I go around 4.5 to 5. That's my projection. And from 2026 on out, we see a huge spike in earnings here due to the sulfur hedges coming off. So the equity will have a boost like this and go higher in the coming years. Currently, we are at 200 million market cap, somewhere here, 2023. So the market is probably going to stabilize here a bit until they eventually notice that the equity starts to rise at a very fast pace, and then the market cap should catch up and follow this trend higher. So the 200 million market cap will go to 300, 400, and eventually go to 1 billion, probably in a few years from now. So this is a multi-year play. It's not going to go to 1 billion in 1 year. You need to wait at least 3 years to get there, as the equity starts to rise and the earnings start to come in when we are in this oil and gas boom. Okay, so that's the turnaround story. Now, there has been some concerns about the decommissioning liabilities for Pieridae, mainly coming from the Ikuma acquisition and Shell acquisitions. So let's take a look at that as well. So I also charted the ARO obligations here. And basically, ARO is asset retirement obligations. When they have assets, they need to clean it up when they stop producing. And that cleanup costs money. And that money is currently around $250 million. That's a lot of money. But this company also has earnings of around 100 million. So I think if they can hold off these ARO obligations for a few years, then the company will have enough money to pay that off. It's around 200 million. So this is an example of such decommissioning obligation from SEDAR financial statements. Currently, the balance is 140 million, for example. It started at 280 million in the beginning of the year. And there are changes in the discount rate. Some of the liabilities are transferred. This is the sale to Pieridae Energy, which is going to go through next year, hopefully. And look at this. This is the expected ARO that will be incurred in the next year. 5 million. That's nothing. So the ARO obligations in the next year is only 5 million. This is going to be incurred after that 1 year, but you're going to see that this 133 million is not going to come due very soon, because here this is the expected ARO to be incurred within 1 year, and it stays around 3 million 2020, and then it goes to 4 million, and then it's now 5 million. So it's not like they need to do an ARO payment of 100 million or something like that. It's going to be around tens of millions of dollars per year, and that's it, because they have very long life assets, 10 years to 20 years, so they can hold that off for a few years. Also, you can also see this turnaround story in the discount rate. So similar to a project with NPV, you have discount rates. As the discount rate goes up, then the NPV goes down, so your project is worth less. Here in ARO, it's the complete opposite, because these are liabilities. So as the discount rate goes up, then the ARO goes down. Okay, and that's good, because then you have less decommissioning liabilities. So for example, if the discount rate, and that's this here, 1.44%, that's this discount rate 1.44%. If this goes up, and this went up from 1.36 to 1.44%, then you can see that the change in discount rate is going more negative. And as this goes more negative, then the arrow is going down. And that's what you see here. As the discount rate goes up, then the arrow fair value goes down. So then they need to pay less in arrow. And that will be visible also on the balance sheet, right? Which will also be visible in equity. Now, why is this rising? Why is the discount rate rising again? That's because the outlook is better. So what does this discount rate depend on? It depends on credit. It's credit adjusted. So as this company pays off more debt, then this discount rate will keep on rising. It's as simple as that, and the arrow will decline because the credit of this company is improving as they have less debt. So that's something to watch for. As the earnings rise and the debt decreases, we will see a more increase of the discount rate here. And that's also inflation rate of 2% is included in this number. Here you can see the settled ARO obligations. So they are able to pay off the obligations, of course, because it's only 5 million. But you can see that they are settling these obligations because they have the cash flow to do so. Okay. And Ikuma acquisition was in 2018. So this is the ARO that was added from Ikuma. And then here in 2019, they acquired Shell. And this is the ARO that was added. Not a lot. Ikuma was higher. Shell's ARO obligations were a bit lower. Some spikes here, probably related to this year. So the acquisition of the Shell assets, of course, also have the reclamation costs. And the thing is that this transfer is still in process. So it's still ongoing, and there's some uncertainty around this. Now, I'm hoping to get an update this year because this license transfer process is still not done. So there's some uncertainty on this in the market. So not sure how that will play out. But based on this is just a small number. If you can see here, this increase is only about 50 million in ARO. And it's coming down even faster right now due to the increase in discount rate. So I wouldn't be too worried about the ARO. They can delay it and pay it off later on as this happens. As they get in more money, and the equity goes now from zero equity in a few years to 200, 300, 400 at a very fast rate, because this is only a 3-year time frame. Of course, this is in the scenario that oil goes to 100 and gas at least stays at 4.5 to 5. If gas goes to 3, if it goes back to 3, then of course this won't happen. And if oil goes to 70 or 60, then this chart will go like this. And that is the uncertainty here. We need a commodity boom. So oil and gas need to go higher for this to play out. So this company is only for people who think that commodities will rise next year and in the coming years. If you don't believe that, then you need to find something else to invest in. But that is my outlook. I think that this turnaround, where unprofitability goes into profitability, will play out, and we'll just have to see if it happens. And I'll see you in the next video.